Hello, everyone. Today is 8th of March, and let's do our it is Monday, and let's do our weekly market update. Now, this is one market update that I strongly encourage that you watch and listen carefully, right? And for what I'm going to share with you. Now, as we can see from this US 10-year yield, now for the last 2 3 weeks, the focus point is on the US 10-year yield, right? And as you can see, the inflations from the yield itself start from the beginning of the year 2010. What we see is the yield is only moving one direction, right? At the end of beginning of the 2010, we saw the yield was about slightly below 1%, 0.9. And as of today, it has risen to above to make a high of 1.625, and it retraced a little bit. Now, from here on, where we think that yield is moving, and there is a market expectations that the yield will continue to rise until 2% by the end of the year. But the rate that we see the yield is moving up, I guess it's before end of the month, we already see it reach 2%. Now, this is very, very scary because it shows that the inflation perhaps has returned for good. The question is, we need to understand how it is going to affect the financial market and also our daily life. How are we going to make profit? This is what we are going to discuss today. Now, before I go ahead, let me discuss what actually happened last week. I think it was the last Thursday, 4 of April. Now, the Fed chairman, Jerome Powell, he spoke in the Wall Street Journal, and he was interviewed by the reporter. And what was the impact when the interview started? Right. Let's go down to the 1 hour time frame. Now, look at this long ERC bullish candle, which I circle. Now, before the interview, we can see that it was the yield was trading and it's actually moving sideways. It made a high of 1.7, 1.49, which is slightly below 1.5, right? And make a low of 1.45. It was hovering sideways, waiting for what this Jerome Powell had to say about inflation, rising yield. And when he start interview and being asked the questions, what he feel about the inflation and the higher yield, the moment he start to talk, you see what happened to the market. The yields fly up from 1.46. It fly up to 1.54. And afterwards, throughout the day, it just continued to rise and hit 1.62. Right? Of course, it retraced back to 1.53 and it go back up to 1.59, almost 1.6, and retrace back, and now it's looking. So now we see that yield is rising. Yield is rising. The market feel uncomfortable. That Fed is doing nothing about the yield, about the inflations, and they say that they are very comfortable with the rising inflations. If I may just rewind or just repeat what he was being asked and what this Jerome Powell answered, right? He said that Jerome Powell was asked, are you concerned about the rising inflations? And he said, no, we are not concerned about the rising inflation. And he said that this is happening because of the positive expectations. Because of the positive expectations, so there is hope. So there is hope, right, about the economy recovery. And because of the vaccinations and that is happening in the United States right now, so there's hope that we'll see the economy return back to normal. And there are also expectation about the fiscal program that introduced by the Biden government. So the combination of the vaccinations plus the QE from the central bank plus the fiscal policy by the Biden government has actually bring forward the expectations about economic recovery and higher inflation and higher yield. Now, on the surface, it sounds everything good, right? Fed is not worried about the inflation, about the rising yield. They think that, these are all because of the positive expectations of all the measures have implemented. right? And they are not worried about the inflation get out of hand, right? They are even willing to let the inflation overshoot, right? And they say that they have tools in place how to deal with the high inflation later. Now, if we take a look at in reality, what is actually happening right now with the higher yield, higher inflations. Now, let's take a look at the crude oil first. Crude oil, right? US oil. It has risen since the pandemic in last year. We saw the crude oil actually went negative, right? We saw the crude actually went negative, and now it has did a V-shaped recovery, right? It has overshoot what has the previous high before the fall, right? And what happened to the crude oil? If we take a measurement, that measure from the low to the current high, the current high is about $67 right now, right? If we take a look at from the range from the low here to the high, we are talking about more than 100% increase in the crude oil just over not since last November. So we are talking about like 5 months, less than half a year, more than 100%. Now, with the green initiative that Biden government is pushing very hard, and they try to cut back. They cut back all the oil production in US, and they make US start to reliance on dependence on the Middle East oil producing country. And what we are going to see is the oil price is going to continue to move higher, right, to $80 and even well above $100 if the inflation keep going up. The pace is going up right now. So we can see the energy cost is going up. Now let's take a look at the other one. This is US oil. Let's think about copper commodity, right? Let's take a look at commodity. Now look at commodity, crazy, right? Start from beginning of the year 2010. We don't want to take from the low here. Let's just take from the beginning of the year 2011, right? The low 2011. We want to see what is how much percentage copper have risen, okay, from this low to this high to the current price. Copper have risen 25%, right? Now imagine if you take it from before last June, July. Oh my God, this is crazy. Almost 80% rise copper price. All right. So we just count from the beginning of the year, this year 2010, it is almost 30% rise. Okay, that is commodity. Now let's take a look at the corn price. Corn, right? This is a corn future. Again, we talk about starting from beginning of the year. Right? Let's take a look how much it have risen. 38%. 38% rise in the corn price. Now let's take a look at the rest of the agriculture. The rest of the agriculture, the ETF is I think is let me see. I think the ETF is called DBA. I think, yeah, DBA agriculture. Okay. Now look at the agriculture ETF. Right. This is an ETF, meaning that it represents majority of the agriculture pricing. This is an ETF, exchange traded fund, from the low that was in back in 2020 last year. The low was here, right after the pandemic. And we see from the low to the current price, let's take a look, 34%. Okay, so now I show you these few charts: US oil, copper, corn, and the agriculture ETF. Every chart which I show you, it rises more than 30% in a short period of time. Right? So we are talking about energy price going up. We talk about commodity price going up. We talk about food and agriculture price going up. And if this is not inflation, what it is? What is inflation? Right? So after you see all these few charts, we see energy price goes up. We see commodity price goes up. We see food and agriculture price also go up by average 30% minimum. Let me ask you, are you worried? Are you concerned about inflation? Or or would you say that we are still have a very, very low inflation like what Jerome Powell said? I think what the Fed say and what happened in reality is totally different, right? So I think the Fed is making a mistake. They have or underestimate this inflation this time. They think that inflation is still very low, but it's already happened in U.S. economy. Now, why we always pay attention to U.S. economy? Because they are still the biggest economy. Every damn country are looking at U.S. for for export to U.S. for recovery. Everything is U.S. right? So if U.S. is down, it's not doing well, and the world suffer, right? So that's why when we talk about forex analysis, everything we look at is always the U.S. Now, after this pandemic, they are reported that there are 10 million people still cannot find jobs. Their job were permanently lost. They will never found again, right? And accordingly, there are 80 to 90% of the SMB, small business, will not able to reopen again after even with all the fiscal spending and the vaccinations carry out. Now, this 80 to 90% of the S&P will disappear forever, will not come back again. So we are talking about 10 million people jobless. So who will benefit from all this? Big company like Amazon, like Walmart, like Costco, because this big company they are able to survive, they are able to absorb, and stay open, and they can survive in this kind of environment, but not the SME. Now, when the economy has only when the economy has only sky high inflation but no growth, that is actually called stagflations. Stagflations. Some of you might ask, what is stagflations? Well, it is when we see a higher inflation in the economy, but with a lower growth. And right now, this is something that we see the U.S. economy is going through. We see very little growth, but inflation is rising very, very high. And the little growth that we see in the U.S. economy is not because there is growth. The growth was induced because of the huge, massive liquidity that injected by the Fed, and the U.S. government is handing out paychecks to the U.S. to the American to go out and spend. The American, after receive the paycheck, instead of invest into the businesses, they took the money and go and open account with the broker like Robinhood and invest in the stock market, which doesn't produce any growth and any real growth in the economy. They took the money and go to the mall and spend and buy some big screen TV. There is no new job creation. The 10 million job is permanently disappear. So this is as if that if we go back to the 70s, right? Now 70s, I know I was still a kid back then, but many of you have maybe not even born yet, right? But those of you who are in the same generation as me, maybe you can recall, right? During that time, the U.S. the Nixon, during that time that Nixon was the U.S. president, he think that he has an idea. He said that in order to stop the inflation, let's rise the price, and he sent the U.S. economy into stagnation. Now this China virus has taken more than 500,000 people life, and more than, if we compare the number of death when U.S. went to Vietnam War, compared to what this China virus has bring about, it has exceeded the number of people who die because of the actual war. There is no war in U.S., but the people who died, the American people who died, is invisible war. It's more than the actual war back compared. If we look at the Vietnam War, it has already exceeded more than 500,000. So this is the problem that we can see right now U.S. is having. They have a huge debt. They have more than 500,000 lives lost because of the pandemic. We see strong inflationary forces due to the pandemic. And with the Biden government, more jobs are moving back to China again, right? We see that happening already. and this is affecting the US job and wages down the road. Do you believe that in the future, the American corporate earning is going to be good, better than today? I don't think so. So we are going to have a lower expectations regards to the corporate earning in the future. The 10 million people who lost a job will never be found again. 80 to 90% of the SME that disappear will be forever. We will not able to. They will not come back to reopen their shops again. And this is something that Jerome Powell acknowledged last Thursday when he was interviewed by the Wall Street Journal. When Jerome Powell was pressurized by the reporter, what are you going to do about the inflation? What happens if we see inflation go higher from here and push the yield even higher? What the Jerome Powell reply is, they don't mind. He said that is okay, it's fine. They don't mind about the current inflations. Let the inflation overshoot. They have tools, right? They want to take care of the 10 million people who lost the job right now, and they need to help these people who are jobless, he said, right? And they know that inflation is moving higher. They are comfortable right now with the inflations, and that's what he said, right? And then they have the tools to do something about it in the future. The point is, he didn't commit anything what he's going to do about these inflations. Even though we see inflation in real life is going up by minimum 30%, right? In all sectors, meaning the energy, the commodity, the food and agriculture. But he has nothing. He presents nothing, no solutions. And that's the reason why we see the yield continue to move higher. So this is something that is very real that we all need to pay attention. We see the very similar situation right now compared to the 70s. All right, so let's see where are our opportunity. Okay, let's take a look at what are the opportunity we might have this week. I have actually posted something over the weekend in our this trade alert trading room, and I mentioned to the group that coming week, which is this week, I will try to avoid trading the dollar, because trading dollar right now is very, very confusing, right? Because there are a lot of undercurrent that we can't detect, right? Now, what are the undercurrent I'm talking about? First of all, we know that the higher inflations will induce for higher yield, right? With the higher yield, dollar is likely to move higher together with the yield because of the better return, right? We see money flow back to the dollar. But on the other hand, we are in the phase of commodity will tend to rise and dollar tend to suffer, and that is actually working against the dollar. And the other thing is, with the Federal Reserve, with right now their main objective is to stimulate the economy. Now, in order to stimulate the economy, they cannot afford to have a very strong US dollar. Now, they don't mind a dollar move up higher, but they can't afford to have a very strong dollar. So in other words, they might come in to do some intervention. So in a way, we want to go long dollar, but at the same time, we are worried that Fed will step in to intervene. So this is something like very, very confusing. So I will stay out of the US dollar for this week, unless I see something that is really very represent very high odds. Then I will trade the dollar. So if I'm going to move away from the dollar for this week, what other currency can I look at, right? Now, one of them is the Swiss against Japanese yen. Now, if this is right, so I'm looking long. I'm going long. I'm looking to long on the Swiss yen. Now, why I pick Swiss yen? Because both are safe haven currency, right? So it is not so it's not affected so much by the dollar movement. So this one trade like I'm looking to buy, right? I'm looking to buy when the price comes down to do a retest, right? So I think this morning I already saw the price coming down, but while preparing this webinar, let's take a look at dollar Swiss. What happened? The other pair I'm looking to do is this is what. Beside the dollar Swiss, the other one I'm looking at is this one, Australia CAD, right? I'm looking to sell the Australia CAD if it rally back to the high of 99.50 area, And once the price drop to about 95, 96 area, I'm looking to potentially look for long again, right? So these are two trades I'm looking at, which I post in the trading room, right? Of course, there are another one is Australian NOK, right? So anyway, let's go to the live chart and take a look at the Swiss yen. Go down to 1 hour time frame. Okay, now I see that Swiss yen is coming back down to test this low again. This is a red box I'm looking to go long, right? So of course, when to get long, of course, you can use your entry technique, right? Using the confirmation entry or using some indicator entry that if you already have it, right? I think that's not a problem. Now the thing is, if I take a look at this, the trend line here, I can see that there are some trader will start to look too long at this area, right? They look at this trend line is holding up, right? 1, 2, 3, 4. Looks like price is coming down. So I think there are some trader looking to long at this area. Okay. Now, but for me, if I look at this market right now from the institution perspective, then I will see things differently, right? If you look at this market from the retail perspective, you will see that, well, this is an area I'm going to long, right? Because it is converged with this how you call it, the low here, which is some people take it as a support, right? There are some other traders who take this as a support, and it also convert with the trend line. So this is a very good area to look for long, right? Well, we might see a long there, right? But I think that the institution trader might even go lower, right? Because they are always looking for stock hunting, right? Of course, this is something which I think I cover in the workshop about stock hunting, that you need to revisit that chapter again, right? If you miss it, then we also have workshop video, that previous workshop video that put up in the OFA new website. Please go there and watch the video, because I think that potentially we might see institution go lower, right, to do stock hunting. Now we also price might not come here. So there is one scenario. Now the other scenario is we also see the price. We have a triple bottom here, right? So in other words, we might see the price SM, the smart money, not our student mentor, the SM is the smart money. They might even push the price lower than this level, which is about 116.30, right? And to stop all this out, they are stop below here. They are stop below here. They might push it down to grab all the stop before go up. So this is one trade that I'm very, very keen to go long this week. I think it will happen today, right? So pay attention to this pair. Now, the other currency which I'm I'm looking forward to long is gold. Now, with the inflation, now this is what I shared in the trading room this morning, right? With the inflation expectation going up, with all the inflation which I showed you just now, right? Now, trader will start to realize that they need to do some hedging, right? And gold is one of the very good asset class that you can use to hedge against inflation. So I'm looking to look for long in gold, which is especially in this range zone, right? I like to look for maybe I'm looking for the gold price to drop even lower to fill up this gap here, right? And once the price drop to this lower level, I will go down to a lower time frame, right? And using some kind of confirmation entry, right, to enter and to go long in gold, right? Maybe I'll take my profit off here about 1720 area, right? Because once the price come to this area, supply area, we might see the price come back, retest again, right? And then if the opportunity, I might re-enter again and look for the next level, 1738, right? So that is what my plan for gold. And one more trade that I want to share with you is dollar yen. Now, with the yield continue to move higher, with the higher expectation of inflations, we are going to see the US 10-year yield easily reach 2%, right? That the market expectation is 2% by the end of the year, but I think that we might even reach 2% by end of March, right? So in other words, this US with the yield continue go higher, dollar is likely to follow behind. Now then to go long in dollar yen is a no-brainer, right? So I'm looking to long dollar yen, but if we take a look at the daily time frame, you can see that it is crazy, right? It just shoot up like a parabolic movement. it looks like the next level the market is going to test is this high, right? 1.10980 or even 110, right? So that is my target for dollar yen. But how to get in, right? So I will go down to lower time frame, maybe 4 hour or even 1 hour, and wait for price to retrace, right? Now, what will cause the price to retrace? I wouldn't know, right? But once the price retrace, I'll be looking to go long on the dollar yen, and with a target of 10980, or let's say round the figure, put up the round figure 110, right? So I believe that this is a very high probability trade with the higher yield, the currency, the yield difference between the dollar and the yen, and naturally dollar will benefit from this environment. All right. So I guess these are the three trades that I'll be looking for now. And for those of you who are interested to look for more trade, you can always welcome to join the trading room. I understand that some traders say that they can't find any trading opportunity, but no, I think I have posted quite many opportunity in the trading room almost like every day, but I can't guarantee that the trade post that even I share some trade in the trading room, it doesn't mean that the trade will be taken in, because what if the price don't go to the level that I'm interested to buy or sell, right? So it might not there, but the fact is we have a lot of, we have kind of we have almost daily opportunity share in the trading room. Now, one more thing before I end here, which is I understand that because due to current pandemic, right, a lot of people have either you lost a job or you're about to lose a job, and you start to look for something else to do, and you can't find anything else to do. And so some trader, they start to wanting to come back to trading. But the thing is, they have left trading for some time that they have totally lost touch. Now, so what I did last week was I came out with a package, right, to help those trader who already not trading for quite some time and you want to start again, right? So what you can do is you can go to our new OFA new website. Now, if you are not able to access to this new website yet, right? You say I can't access. I have restriction in accessing the content in the website. It is mainly due to you have not yet registered with our this new website yet. So please send me a message if you not yet able to access to our website, because once you log into the website, you can go to the Forex tab, right? You go to this the market. OFT weekly market update, it will be updated here, right? You can see every week, every Monday, you're able to see the weekly market update. And also under Forex tab, you want to go to this OFA web workshop, right? In this, we have the OFA technical analysis, fundamental analysis. Now, these are the most recent workshop video recording, right? So please go and watch this video, right? And now, after you watch the video, if you feel that it's still very lost, right? You still feel very lost. What I would suggest, this is just my suggestions, right? What I would suggest is, in order to help to kickstart trading again, go to click this subscriber tab, right? You might, I just a suggestions, right? You might want to pick this one-on-one Forex coaching, right? Which I specially created only last week for our students, because I have some students who actually joined us many years ago, and now they come back, they say they totally lost, they forget what they have learned, and they want to restart again. And some of them say they can't find trades, right? So I would suggest that go and visit the video, watch the video. If you still feel very lost, you don't know how to start, what I suggest is go with this. Click this program, this package, one-on-one. So in this program is a one month program, which we will meet once a week, right? And every session will last for 60 minutes using Zoom, right? We log into Zoom, right? And I will walk you through step by step how to look for trades. And this program, this one-on-one coaching is actually specially created for trader who already left us for quite some years, never do trading, and now you want to kickstart your trading again in a short period of time. And I believe that this one-on-one coaching will help you a lot, right? And you also able to access our this trading room, right? For any daily trade alerts that I share with our subscriber. Okay, so this is one option that you might want to take, right? If for those of you who say I can't find a trade and I totally forget how to trade, right? So in order to get your trading start again, right, in a short period of time, right, you might want to consider this package, right? So with this, I want to end this week market update. Now, the theme of this week market update is, remember, the inflation, it looks like is here to stay, right? It's not going away. And we already see energy price, we see commodity price, we see food and agriculture pricing are all rising very, very aggressively, minimum 30%, right? So what are you going to do about this? How can we make money in this inflationary pressure environment? So I hope that this short market update give you some information what you should do moving forward, right? Thank you, and I'll see you again next week.